Good morning, guys. So, why I've got your attention and the fact that the birds are not up and singing yet, I'm going to run through very briefly a few currencies with you. And first of all, I'm starting off with the dollar yen. Now, the dollar yen, as you can see, has made a little base, but we are in extreme overbought levels on the daily chart. We're not on the weekly. The weekly is neutral, pointing higher, and at 32%. We are on the daily, as you can see, extremely overbought. If you take this little pattern here, the breakout of 106.89 has left a target of 109.29. This is totally against my personal view that the dollar goes lower. But at the moment, if you look at the 55-day moving average, which is at 107.21, and then I go across and I look on my other system at the moving average, the 200-day moving average, that's at, funnily enough, 109.57, which is where the target area is. Now, dollar yen, if we squishle that up, hasn't been looking a very well little bunny. It's come all the way down, basically in a straight line. You can see here where I drew that trend line on. We could not break above it. Down we came. Now, I will be looking to sell dollar yen for the reasons that I've mentioned. Can't break through the 55-day moving average. It's overbought. The RSI is neutral, but pointing a little bit lower. But I'm not stupid, okay? I will sell it as long as it stays below 107.47. If it doesn't, I'm out. And that's giving it a little bit of leeway, because we know the algos and the stop hunters are out there with you. Where is it going to go down to? I've got a line, I've connected those two low points. That's brought that line, as you can see, coming in just above the 38.2 and the 9 and the 21-day moving average. If I take the lowest rate of that, that's coming in at 106.28. We're currently trading at 106.89. I'm looking to sell up here. I'm looking to add to here. I'm not stupid. If it breaks above there, I'm gone. But that's just a little view on dollar yen. Now here we have one of my favourite, as you all know, markets, dollar CAD. I've always liked dollar CAD. For me, it's a wonderful market. And for me, it's quite an easily, it's an easily read market. So there we go. We're based at 130.20. Up we go. We can't break above this area here. We have a lot of resistance up at this 134 area. But it's down at 131 now, 131.69. Look where it stopped on Friday, at the 61.8 fib. The low on Friday was 131.58. The 61.8 fib is at 131.57. Don't tell me fibs don't work. They don't work if you don't put them in the correct place. Now, last week we broke through and closed below the 200-day moving average. That was at 133.10. We are below the 9, the 21, and we're also below the adaptive moving average that I use, which came in Thursday, funnily enough. It came in Thursday at 132.50. Dollar yen, dear Lord, dollar CAD is one of the most volatile markets, but one that holds levels extremely well. So, Dollar CAD's overbought, obviously. I'm looking now at the monthly chart. You can't see it because it's on another one of my 83 systems. That's still pointing lower. I look at the weekly chart. That has diverged and showing the move to be lower again. If you look even at the daily, you can see we had divergence. So when we reached these highs, and the market was up here on stochastics, as we went into a consolidation phase on the dollar CAD, the stochastics didn't react. So for me, the stochastics, well, it's not for me, the stochastics diverged, okay? So this is, when we say dollar weakness, you have to look at the individual markets because one moves more than the other. So if we'd have had a euro-yen position on, for example, we would have been okay. So that's the dollar CAD. Let's go to dollar Swiss now. You can see where dollar Swiss slammed down on Friday. We're trading now on dollar Swiss at 98.91. So we're basically unchanged. You can see where we hit the adaptive moving average at 99.17. We couldn't get to the 200-day moving average. We are above the 55, 9 and 21-day moving average. You've got a lot of support down here at 98.16. First 98.35, 98.16. You've got the moving averages coming in. Let me just draw them up. 98.32, 98.56. We don't talk about the 200-day yet. 98.07 is the 21-day. So you can see that it is cradling and did cradle the last two lows. Now, with dollar Swiss, it's looking different to dollar yen. Yes, it still wants to go lower, and if there's chaos in the world, gold and Swiss is where people will run to. You know, they will. So for me, at the moment, the way that the market is looking with these sort of indifferent, neutral moving averages, stochastics and RSI, MACD, what I'm looking for is for the dollar to weaken. And more, I think, in sterling and euro, but we'll do that in a bit. But I'm looking for the dollar to weaken, but I'm aware of where it can weaken to. If I drag this out for you and I put on a very small fib, which is what I like to do, and you can see I'm going to put it from that point to that point. And look, hey ho, the 38.2 is coming in at 98.25. So this, between the 98.30.25 and 97.93, is going to be where this market is supported. You're only worrying about dollar Swiss going higher if we take out that 200-day moving average, which is at 99.50, and we close above it. Then we sit back, we rethink, and we don't really want to be sellers of it. That's all I'm going to say on the dollar Swiss. As I said, this is only a brief overview of the currencies as I see it. Now another one of my all-time favourites, the Kiwi. Look how strong it's been. You know, we saw it at the beginning of last week. Yes, we're looking a little bit overextended, but not a lot. And it's still pointing higher. Everything in Kiwi is pointing higher. Next stop, I think, for the Kiwi, 38.2, 64, 67. Now, currently, at this moment in time, in its life, Kiwi is trading around the, let me have a look, 64.26 area. So, up slightly today, but not that much. I think Kiwi's got a lot further to go. Yes, we're going to see overbought, obviously, on the daily charts. But we're just beginning to turn bullish on the weekly charts. And that can't be ignored. Now, my trend line on the weekly charts is coming in this week at 65.20. Okay? That's my trend line on the weekly chart. Your 50% fib is 65.25. Please take notice of this. If somebody says to you, yeah, but Kiwi's gone up all last week. Yeah, okay, it's gone up all last week. Well, it went down all in August. So, because it's gone down all in August, and we are looking at target areas, first one here, as I said, 64.67. We're trading at the moment 64.26. You've got all this up here as well. You've got these lines, you've got the 2 adaptive moving average and the 55-day moving average, and they're coming in, here we come, 65.35 and at 65.48. So there's a lot of reasons why Kiwi can keep going higher. Ignore the fact that it's gone up all week. Look at the chart, look at what it's showing to you, and look that, all right, it's gone up all week. It's still got further to go. So we are in a buy dip scenario. Any level down to 63.91 or even down to here, which will come in today at 63.46. We are buyers of Kiwi. Sorry, New Zealand dollar. Also, I like to look at the Aussie Kiwi cross. That's trading at 106.69, which means the Aussie is getting ahead of itself a little bit. That's what I'll do next. Now the Aussie. See how we've broken through the 38.2, okay? This is why the Aussie Kiwi cross has gone higher, because the Aussie at the moment is outperforming the Kiwi, the New Zealand dollar. We know Aussie Kiwi has got a big resistance area around the 107.5. If I'm looking across, which I'm doing now, at the Aussie weekly chart, lovely week last week, good bullish week for Aussie, and the stochastics that have been bearish on the weekly charts have just in effect turned bullish on Friday's close. What does that tell me? It tells me this. We've had a good run. Look at this triple double base, okay? Do not ignore formations like this, especially when it hits a level and bounds back so much higher. Did there, but not as much. Did there, but not as much. So we've still got this base in place. And that comes in, the base, at 66.77. We're going to ignore that. We're going to look where we can retrace back to. You've got the 9 and the 21-day moving average. And coinciding with that and intersecting with that is the 23.6 coming in at 67.72. I think we go higher. I think that any dips should be bought. Yes, we're overdone on the daily charts. As you know, I always take notice of the longer term charts, of the weekly monthlies are the ones that I look at and put my heart into, and that is where I get the 90% of my analysis. Okay, so with the Aussie, you're looking to buy any level down to here, adding to here, and only put your stops below there, which is 67.37. But bear in mind you're buying the hell out of Aussie if it gets down to this area again. Personally, I don't think it will. Okay, I think Aussie's on a roll. I think the Aussie Kiwi cross can go another 100 points, and I like Kiwi too. But when you look at the individual markets, same as people look at sterling and euro, look at the euro sterling rate. That's going to guide you. Yes, it's great to look at outright majors, but look at the other things that coincide with it, with currencies. They do. If you're doing dollar yen and euro, look at the euro yen. So this is one of my favourites, is the Aussie Kiwi. I don't need to put up a chart to tell you. I know where the resistance is. I've been doing it far too long for that. But this is a guide to you. Don't get carried away. It's overbought. The weeklies are not. They are just showing that we're going to go higher. Wait. Buy down into weakness. Okay. This is going to cap initially at the 68.79 area. And above that, we've got that magical 61.8 at 69.27. And the adaptive moving average is coming in at exactly the same point. I really hope that you've enjoyed this very long, it wasn't going to be this long, but this very long video on the different currencies. Good luck, guys, and I'll see you all when you wake up, which my lot obviously haven't. Okay.